Hello, folks. Welcome back. So we're going to be looking at a AM session review for NASDAQ May 5th, 2025. All right, so we're looking at the daily chart here, and I want you to take special note of how Thursday created a premium wick that got blown through on Friday's non-farm payroll. And then we opened here and traded down into Friday's range. But I teach you to use these wicks like gaps. Okay, so we're going to zoom in. I'm going to lay the Fibonacci across this here. Be mindful of this high and this wick. That's what we're going to be drawing attention to. All right, so here we have Thursday's price action on the daily chart. I have the lower quadrant, consequent encroachment, the upper quadrant, and the high of Thursday's wick, and the low of the wick. In this case, since it's a down closed candle, it's the opening price. So those four levels here, and then we have, actually it's five, isn't it? 1, 2, 3, 4, 5. Check my math there. Having a senior citizen moment. And then this up here. So longer term, until proven otherwise, the draw is here. And we're going to look at how price used that consequent encouragement level. The midpoint consequent encouragement level of that Thursday premium wick, now acting as a discount array, is 19,980 even. Okay, so just be mindful. When we see that line in the lower time frame charts, it's this wick's halfway point or consequent encouragement. We're in a 15-minute time frame. I mentioned on Telegram that 15-minute buy side was a draw, and you can see how the market dropped down and spent some time at that consequent encouragement on Thursday's premium wick. That is now, because we went above it on Friday, becomes a discount wick. So we traded down into it. Consequent encouragement hits it here, back and forth. Really, really lots of high resistance liquidity run signatures in here. Look at the back and forth price action. But ultimately, it did get to our objective here. But just be mindful that 19,980 level was hit earlier. And now we're on a 1-minute chart. So here's that same level, the consequent encouragement of that Thursday wick. And because it hit it earlier, prior to 9 o'clock in the morning, you can see that on your own charts. We had all this price action back and forth, overlapping previous ranges just to climb back above to get to that 15-minute buy side liquidity. So I want to take your attention to a very specific pool of liquidity I mentioned on Telegram for sell side. This is the only sell side liquidity pool I mentioned. And this was the initial one I told you about. So relative equal lows, real easy, right? Real easy. Now, why did I go back further than 9 o'clock? Because this is the first one I'm going to come to. And we've already worked several lows in the pre-session. And it's just cleaner. It's easy here. It's a Monday. And we had a high impact news driver at 10 o'clock. And we came down already earlier in the sessions to trade into that consequent encouragement level of the Thursday wick. So we went down below it, swept it, and then I drew attention to this candlestick being the first resistance fair value gap and this volume imbalance. You can find that on my Telegram channel. In the description of my YouTube channel, click on that. You'll see the actual link, the official link that takes you to my free 100%, no obligation. I'm not trying to do investments. I'm never going to ask for payments. If you're looking at anything that has anything like that and my name attached to it, you're looking at a scammer or a fraud. So these two levels here, the first presented fair value gap and the volume imbalance were the two levels of focus. And then I mentioned the 15-minute buy side here. And then I gave a further higher 19,000, or is it 20,235 or something like that. I'll let you look at it on your charts, okay? But if we continuously go higher, that's a nice relative equal high in the Friday trading session. So you'll be able to see it. It's your homework assignment. I'm not giving you everything in Telegram. I want you to find it on your own chart. That's part of the tape reading exercise. So I want to show you Zoomed in here, there's that volume imbalance. Here's first presented fair value gap. And after cleaning the relative equal lows up with this stop there, we ran back above this SIBI, which we're bullish. We're looking for 15-minute buy side. Higher prices. We went above it, traded down in, traded down in. It left it. See how I did that right here? Now, when we trade back up higher, it should not go back down in the lower half before running to buy side. So we get it on this candlestick right here, and I'm aiming right for that volume imbalance right in there. And I'll show you the execution. Here's the candlestick, and there is the little indication that you're getting long or short. In this case, it's a buy there, and then it rallies up into the 15-minute buy side. Now I'm going to put my cursor on this little arrow, and you'll see that the little caret symbol appears right there. Okay. So there was no other trades. One of my students facetiously said, "Show the short you got stopped out on. No shorts today." So it dropped back from there all the way back down to first presented fair value gap, banged around a little bit in here. Failure to get back above that 15-minute high. That was the buy side on my trade. And I mentioned on Twitter, look at these lows in here. That's retail support. And it broke through that down into first presented fair value gap. And I told you to watch that there. And then it rallied up and took out the high here. And there's the business for today. So in keeping with what I mentioned this weekend, I was teaching about narrative. And today, because it's a little bit more complicated, difficulty level is just a little bit higher. I pointed out the very liquidity pool that it would use to create the low of the session, which is what it did here, and then rallied up. Now, I mentioned in closing after I did my trade and shared it with another, I mentioned to watch 8 o'clock's low, 8 a.m. today, because if we lose that low, then we're probably going to have a deeper retracement on the daily chart. So as long as the 8 o'clock low is intact, it doesn't violate that, I'm bullish. So that kind of like it makes it more clean and clear as to why I mentioned it at all today. That's it, folks. I'll give you a PM session review later on. So I'll talk to you then, Lord willing. Be safe.